Euro to US dollar surges to multi-month highs, nearing the 1.1250 level as it bounces back from its earlier retreat during the European session. Despite a cautious market sentiment, the US dollar is experiencing renewed selling pressure, leading to the pair's upward momentum. Traders are eagerly awaiting the release of consumer sentiment data, which could further influence market dynamics. The Relative Strength Index, RSI, on the 4-hour chart indicates that Euro to US dollar is approaching overbought conditions in the near term, with a reading near 80. If the pair experiences a corrective move to the downside, initial support can be found at 1.1200, which previously acted as resistance and holds psychological significance. Further support levels include 1.1160, also a former resistance level, and 1.1120, which represents the upper limit of the broken ascending regression channel. On the upside, interim resistance has formed at 1.1240, followed by 1.1270, a static level from March 2022, and the psychological level of 1.1300. During the Asian session on Friday, Euro to US dollar extended its rally, reaching its highest level since March 2022 at 1.1244 before experiencing a modest retreat. As the European morning unfolds, the pair remains comfortably above the 1.1200 level. The US dollar, USD, experienced selling pressure on Thursday following softer than expected consumer price index, CPI, inflation data and a report from the US Bureau of Labor Statistics indicating that the producer price index, PPI, only rose 0.1% year-on-year in June. The USD sell-off continued in the American session as risk sentiment dominated the markets. Despite some Federal Reserve, Fed, policymakers expressing their willingness to maintain tightening policies despite positive inflation developments, Euro to US dollar maintained its bullish momentum. The upcoming Fed blackout period, starting on Saturday, may prompt Fed officials to push back against market expectations of a rate hike in July. However, it may require more than hawkish comments to convince the markets that the Fed remains on track for 2 more rate hikes this year. It is worth noting that Euro to US dollar has already gained over 200 pips this week, potentially leading investors to secure profits before the weekend and potentially limiting the pair's upside. Nonetheless, a significant recovery in the US dollar may be unlikely until strong labor market and inflation data emerges, prompting a reassessment of the Fed's rate outlook by market participants.